Hey everybody, Joel Daniel here, broker with Greenleaf Real Estate. I'm here with Charles Vamdeva, my preferred lender for Southern California. This video today, we're going to go over rates, what buyers are paying right now, what the rates are, and I'm going to start just by going into some data. I'm not going to go too much into it because I already have a monthly video that goes over this, but we just want to talk back and forth on what you are going to pay for certain home prices in this market depending on what loan you pick. First thing I wanted to talk about, the median sales price in the last 2 months has gone from around $710,000 to $760,000. Wow. One of the reasons that this is happening is over the last 10 years, we have the lowest amount of inventory in any month in any time in history over 10 years. People are not selling their homes. They've got a low interest rate. So the problem right now is supply, and buyers that want to purchase a home, we're almost back to 6-7 months ago where it's crazy. I went to an open house the other day. There was 50 people within 3 minutes of the open house opening up. So again, what we want to do today is just talk to you about what your monthly payment's going to be for each and every type of loan in this current market, and we're going to be doing this every month.
Yeah, let's do it. So It's an interesting time. Just got to add to what you're saying. Most people are not selling because they've got a super low interest rate, and if they were to move up, more bedrooms or a pool or something like that, that would involve a higher interest rate. Right, so those sellers are staying put. Is that fair to say?
Oh, absolutely.
So the people that are selling are the ones that have to sell, right?
Yeah.
Divorce, job relocation,
moving
death,
out of state.
Right, death, someone died in the family.
Yeah.
So, I read one report where we're nationwide, we're about 3 million homes short.
Wow.
So what is that to buyers? I mean, what do you tell a buyer with that in mind?
Like what I'm telling buyers right now is, if a home comes on the market, first of all, if it's upgraded and shows really well, you're going to have multiple offers. If you can't wait, you can't be on the fence, you have to be aggressive, you have to go the first 2 or 3 days, you have to have good communication from agents back and forth. You have to figure out or try and figure out where you need to be at to be competitive. We're back in this market again like it was. I don't think it's as bad as it was a year ago, but it's still pretty tough for buyers.
As far as the competitiveness.
Oh, absolutely.
A smaller pool of homes and a bigger pool of buyers.
Yep.
So rates, it's funny, people ask me all the time, what are rates doing, right? That's the famous phrase, what are rates doing? Well, it kind of depends on what the reference point is. Are you talking about 2021 versus now? Are you talking about the summer of 2022 versus now? Are you talking about last week versus now? There's a chart that we're showing up, shown on the screen here. So this chart shows you what rates have done. This is from the St. Louis Fed website since I picked June of 2022. And you can see the pinpointed on there, November 2022, we peaked at an average interest rate. This is the average interest rate, a 30-year fix, at 7.08. And then you see a dip, an ongoing dip from November through around March, maybe early March. And then we saw an increase, and then we dipped again up until last week was around the 20th, 21st. And now we're seeing a little bit of an increase again. So it's just sort of up and down, but, compared to the summer of 2022, we've definitely increased. Now, people are asking, well, where are we at? Well, the average interest rate as of the 20th of April, we're recording this third week of April, was 6.37%. People ask me all the time, well, that's high. I think what's high is you renting. What interest rate is that effectively? I feel like the conversation to be had, Joel, is not what is the interest rate, it's what can I afford? If you can afford, get on the bandwagon, because chances are historic data tells you prices will keep going up. Here we are, we've got less inventory, but we've got 50, 60 buyers in an open house. That tells you there's a lot of demand. Is that fair to say?
Oh, absolutely. And I tell people a lot, especially around this area of Temecula and Murrieta, I'm not going to sit here and predict prices over the short term, but I can pretty much guarantee within a 10-year span, your home is going to be worth more in 10 years by a lot than it is today, because Temecula, Murrieta, these are prime locations. People are moving here, school, safety, quality of life. You wouldn't believe how many people want to move to this area because of those things.
You gave me some figures the other day. Median price in Temecula, $689.
Yep.
So we ran some figures, guys. If you're watching this, we ran some figures for a 95% conventional 30-year fixed loan, 5% down, and there's an approximate payment on the screen at an interest rate of 6.875. Of course, the APR is going to be a little bit more than that, probably in the low sevens, but you can see a payment of $53.40 a month with PMI, and PMI is on there because you're putting down less than 20%. $53.40, and then I took the Murrieta. I think you said Murrieta. The median price was $629.
Yep.
Does that sound about right to you? 95%, 5% down, payment of $4,881 per month. So, as a would-be buyer, you tell me, is that person not supposed to compare that with what they could rent for?
Yeah, absolutely.
Right?
Yeah.
And what will be the disparity between that type of payment and renting?
Yeah, and rentals right now in Temecula and Murrieta for the average home is going to be around $3,200 to $3,400 a month. And what Charles is saying, that's only with 5% down that they're putting. So obviously you can diminish that payment quite a lot. The more you put down, which you can get into.
In fact, let's talk about that. I did a run at 85% loan to value, so 15% down, conventional 30-year fixed at the $689 median price in Temecula, and we're showing a payment of approximately $4,700. Right, you can see that on the screen. Now, $629 for Murrieta, as you can see on the screen, the payment comes down to $43.06. Which is probably fairly close to what you're gonna. I've seen some homes for rent at $4,500 a month in Menifee.
Yeah, exactly. Yeah, the nicer homes are getting over $3,500 for sure.
No, I did. Just out of curiosity, of course, the loan limit for FHA here in Riverside County, where Temecula is and Murrieta is, that loan limit now is $644,000. So I did an FHA comparison. This is at $629, so that purchase price would handle an FHA deal. 3.5% down, which can be gifted, and that payment's $5,066 a month, including the FHA mortgage insurance, which would be at 0.55 a year. So you're right around $4,000 to $5,000 a month. What's your thoughts on that?
Yeah, I mean, obviously, in this market, the more you can put down, probably the easier it is going to be for you to make your payment every month. But if you have good income and you want to put less down, that's FHA is a good option.
Right.
And you were saying that FHA and VA, the interest rate's a little lower than conventional right now. They
are. FHA and VA, government insured or government guaranteed loans, and so they're considered less risky. Whereas conventional is backed. We haven't talked about VA. Veterans have a tremendous advantage because they can borrow 100% without any money down, and we don't have the payment right here in front of us, but it definitely will be lower than FHA because there's no mortgage insurance.
Yes.
You see? Yep. So they have, if you were to line up a VA buyer with an FHA buyer or a conventional buyer, the chances are the VA buyer is going to have the lowest monthly payment.
Yeah. And when you talk about PMI, would you be able to say for 3.5% down, PMI on the average home is going to be around $400 a month? Would you say?
I'd say a little bit less than that. It's 0.55% per year now for FHA if the loan amount is below $726, which here would have to be in Riverside County.
Okay.
We ran a PMI for conventional, which was incredibly low through one of our lender partners, UWM, 0.45% a year at a 700 FICO score.
Oh, wow.
Very, very competitive.
Okay.
And of course, with conventional, you have the ability once equities, a certain amount of equities reach, where you can get rid of that PMI.
Yes.
So the question is, should you buy now?
Yeah.
Right?
Well, if we continue to see these active listings plummet, it's obviously going to increase home prices. I mean, supply and demand, simplest thing in the world, supply and demand. There is nothing to buy. So as you can see again from the chart that I was showing earlier, prices have increased almost about $60,000 in 2 months on average.
What would you say to a buyer, Joel, that could have bought in October, November, and now they're looking at May, June. How is that buyer better or worse off, would you say? Just curious from your opinion.
Well, in my opinion, obviously, which rates have just gone down almost 0.75%, right?
Yeah.
Eventually, rates are probably going to go maybe in the 5 range, maybe 4.5.
Yeah.
So you're buying the home or in November at a little lower price, and then in a year or two, once you have that equity, once home prices rise, you can refinance and get the lower interest rate, which is going to drop your payment a lot.
Right.
And as we were talking about earlier, before we started the video, 1% in way of a mortgage interest rate is a lot per month.
Right.
It's hundreds and hundreds of dollars. On that price of home.
You're right. And in the buyer's qualifying power, buying power as well. And rates are high because inflation's high.
Yeah.
They get inflation down, the rates should come down with it.
Yeah.
Bonds improve. So I feel, as a professional, I feel like the smallest thing could set this market off in a big, big way. I think 4s and 5s, we've been there for years. That's a good, healthy interest rate. But we saw, 1.99, it almost feels like that was artificial.
Yeah.
And it wasn't good for the market. So these are interesting times that we're in. And hey, if you can afford, you need to jump in.
Yeah, exactly. And once rates hit that 4.5, maybe even 5, hopefully that starts to release a little more inventory because people feel more confident in moving up. Just getting the home that they actually wanted, they can afford it.
Right.
We were talking earlier on another big problem is that with rates at 6.5 to 7%, these buyers with the 2.5% interest rate right now, even if they sold their home, had $200,000 in equity, bought a home, moved up to the 4-bedroom instead of the 3-bedroom, their payment is going to be generally more than what they're paying now. A lot of them they don't even qualify with the lender, and that's an issue as well.
Yeah, I want to add to this conversation. I don't know if it's relevant. I think it is. A lot of homeowners are sitting on a lot of untapped equity. It's just lying dormant. And there are so many programs out there where you can keep your fancy 2% interest rate, go get a second loan on their house, maybe for $50,000, $100,000 by means of a home equity line of credit. There's even programs where self-employed homeowners can use bank statements to document their income. And not have to cough up tax returns and pull some money out and go do some investing with it. You don't have to buy $1 million home in Malibu. There's investment opportunities in the Midwestern states. So we're seeing a lot of California homeowners are like, well, I'm not going to sell. I'm going to stay put, but I've got all this equity. I'm going to tap into it, pull 50 grand, pull 100 grand down, go put it down and buy something that cash flows in another state.
Absolutely.
Tremendous opportunity.
Yeah. I hear a lot of people, finding a good area in the Midwest that produces cash flow. Yes, you're not there, and you might have to get a property manager, but having that $50,000, $60,000, putting into a rental, now you have cash flow every month. And
I think what we're saying, we're sort of paraphrasing, is you tell me, is it fair to say, Joel, there's never a bad time to buy a home?
Yeah.
Is that what we're saying?
Yeah. I mean, it's the data is right here. I thought when we hit last year, November, January, I thought, yes, we did see a drop from the last 6 months, but I thought we were going to keep going. And right now, to go up in way of average sales price in the Inland Empire by $60,000 in 2 months is crazy.
Significant. Yeah. Wow. Good stuff. So good info.
Okay, well, thank you very much for another great video.
Yeah, good information. If you guys are out there watching this, reach out to Joel Daniel, realtor, broker. His number's on the screen. I'm Charles Van Mediva, Patriot Pacific Financial Corp. My number's on the screen. Love to help you with the financing, and Joel will hook you up with the real estate transaction.
Absolutely.
Take care.
Thank you.